was just like, shit, he liable to see somebody he locked up in that bitch.
No, that's not the case.
All right, so we're live. We're live. So I want to welcome everybody to the show. We're talking real estate. Let's go ahead and get right into it with the introductions here.
I'll get with you later.
I'll go ahead. You want me to start off, or CJ, you ready to go?
Let's go.
All right, so let's start off the introductions, and then we'll go from there. We got a special guest on the panel, and we'll go from there.
Cool. What's up, everybody? CJ, the realtor broker owner of Greenwood Realty Group in Houston, Texas. Connect with me on social media at CJ Sales Texas. That's CJSELLSTX. Collab with me on there if you want. Of course, got the website greenwoodrealtytx.com if you're a seller, buyer, or if you're an agent looking for more information about the brokerage and what we offer. We have all the information on the site. So check that out. Got any questions, let me know. And we're doing the YouTube channel, CJ the Realtor, where we're doing our home tours Lux Edition, and we're doing some things like our local business owner highlights and other things. So go on there, let me know what you think. Subscribe, comment, share, all that good stuff. We need all the action on there. So go on there and let me know what you think on that too. And then, of course, we give back with our mentorship program, the Mansa Academy, where we teach our young men knowledge of self-improvement, and entrepreneurship. We got all the information on there. If you got questions, go on there, check it out. Hit me up if you want more that you don't see on there. I got you.
Gotcha. Let me go ahead and do mine, then I'll introduce our special guest. And as other panelists pop in, they pop in. So, all right. So, my name is Brandon B. Dixon, NMLS 1541210. It's at Billionaire Loan, also on all social media. Please like, subscribe, follow, comment, so on and so forth. Especially the YouTube. We're trying to grow our YouTube, so go to at Billionaire Loan, also on all the YouTube. Like CJ alluded to, I got my own personal show, Behind the Sauce, and we got the Home Tours Lux, where we're touring some of the hottest properties in Houston. So go ahead, check that out. Go to my website, www.applywithb.com, if you're ready to go ahead and apply for a mortgage, or you want to book me for a consultation if you have some questions. That's the site to do it at, www.applywithb.com. Also, you can call me 24/7, 832-775-8357. You can call me 24/7 as long as it's about business. Last but not least, I got a couple more things. Go to my website, www.brandonbdixon.com. Also, I'm a luxury agent. So if you want to go ahead and lease, you want to buy, you want to sell, you want to invest, that's the site to do it at. So I can help you all the way around. I got one other special announcement. It's official. LenderCon, we set the dates. So you can go to www.lendercon.com. We're bringing it to Houston. July 22nd is going to be at the Houston Improv, 1 p.m. to 5 p.m. I just put the actual link for the Eventbrite in the comments. So it's going to be right here in the comments. So go to eventbrite.com/LenderCon, blah, blah, blah. It's in there. So first 25 tickets are going to be free. I hadn't decided out what I'm going to charge yet as far as the rest. So I got 25 tickets right now. Go ahead and get them before they run out. So I got 25 tickets right now that's free. So limited time on who knows. If they go today, I'm not sure what I'm going to be charging for it. So it could be $1, $5, whatever. So if you want to get the free, it's limited time. So go to the link that's in the actual comments. Go ahead and get that started. Barry B, I got you queued up, so you're right on time. So, all right, so I got home. Here we go.
All right, this is Barry B at Homes by Barry B. So if you're looking to buy, sell, or invest in real estate in Houston and surrounding areas, give me a call, 832-786-1270, or you can, I'm on all social media, so you can Google Homes by Barry B, and you can send me a message, you can give me a call, email, and let's talk about accomplishing your goals.
Gotcha. All right, last but not least, we got our special guest, John Flowers, who's my insurance guy, man, my go-to insurance guy. He's we've been working right after the pandemic, right?
Something like that. Yeah. It's been a minute or two.
Go ahead and introduce yourself. I got you queued up as far as your info. Go ahead, tell them what you do, introduce yourself, so on and so forth.
Cool. Thank you much. Before I do that, B, so if I'm calling you at 2 a.m. for a loan, you're gonna answer?
Absolutely. I've talked to people on the West Coast that's stationed in Iraq and all that stuff, and as long as it's about a loan, now, hey, how you doing? I wanna. How do you make money? That's if it's about something business wise. Yeah, a
That's
loan.
fair.
Yeah. So
That's
people on
fair.
the West Coast and all kind of stuff call me.
All right. Well, B, thanks for having me on, CJ. Good to see you again. Barry, I don't know if we've met before, but nice to meet you. Nice to meet you virtually. I'm John Flowers with Goosehead Insurance. Goosehead itself, it's the largest independent broker, and I specialize in all home and auto investment, landlord type policies, toys. Goosehead itself, it's the largest independent broker in the state and fastest growing in the country, which is great and all, but honestly what that really means is I've got like 35 plus carriers that lets me shop the market for my clients, making sure they're getting a good rate, obviously, especially with the market the way it is right now, but also appropriately ensuring what's likely to be, if not their biggest asset, close to their biggest asset. Sometimes with insurance, it's like trying to fit a square peg in a round hole, and it can be really difficult. And yeah, I'm in Houston, but I ride all over Texas.
Right. And so that what's on the screen right now, that's your email where they
can
contact directly.
Anyone interested in shopping around their quotes, home buyers needing insurance for closing, my email, john.flowers@goosehead.com, or my phone number, 713-966-6368. Call me, leave me a message, shoot me a text, hit me up.
Gotcha. All right, cool. So let's go ahead and jump right into the show. We're not going to take too much of your time this afternoon. I know we touched about a month ago on insurance, but it was a popular show, so I got a lot of questions about it. So I want to have like a part 2, and I have some more clips for us to review and watch, and we'll get everybody's insight on everything, especially John, since he's the expert. But I want to go over, mostly homeowners insurance today. Like, homeowners is kind of our specialty, and it's a big part of their actual bill, and it can influence like the affordability big time, because as everybody's scratching for affordability, it's a big thing. So let's go ahead and jump this right into the first clip, and then we'll go ahead and react, and we'll go from there. So let's go ahead and hop right into it, man. All right, so let's go ahead with the first one. Now, can y'all see the screen?
It looks like it's loading.
Yeah.
What do you mean a shortage of $5,212?
It means you paid that amount under what you were supposed to pay last year.
This is such a common occurrence. Most people have no idea that your mortgage payment can change. And just to be clear, I'm not talking about an adjustable mortgage. I'm talking about a fixed 30-year mortgage. Now, it's not your actual mortgage that's changing. In this video, it points to the escrow account. Your escrow is your property taxes and your insurance. Both of those things can go up every single year. The value of your property is assessed. If the value of your home increases, so do your property taxes. Not only that, your insurance increases as well. And I've seen more than ever tons of insurance companies backing out of counties and states. Living in the South with hurricanes and flooding, etc., there are companies raising their annual premiums, and so there's a shortage in your escrow account. That being said, you need to do 2 things. First, make sure that your primary residence is homestead exempt. The way you do this is you go to your county website. There's an exemption that you have the option of choosing, and it's only for your primary residence. It literally cuts your taxes in half. And the second thing you need to do is shop around for homeowners insurance. You can do this every single year.
Last year, you do have a shortage of $5,200.
All right, so I'll go ahead and open that up to first to you, John. What do you?
The first thing that guy said, it's not that your mortgage or your monthly mortgage payment or your payments can change. It's they are going to change
right
every year. And I couldn't tell you, even just over the past few months, how many calls I've gotten from people that are confused about their payments and not understanding why the premiums or why their monthly payments have gone up and they've been in their house at least a year. So yeah, as far as like the escrow thing, that homestead, definitely make sure you're you've got your homestead exemption, protesting your taxes every year, and shopping your insurance every year. Specifically, something that he said, carriers backing out of counties and areas. Not only are they doing that, some are just going completely bankrupt.
Right.
Texas, I got an email of a slide a couple weeks ago, and I think it said Texas since 1985, or from 1985 to 2023, Texas has incurred more billion-dollar losses, catastrophic weather losses, than any other state, totaling out, if I remember correctly, it was totaling out at $393 billion in losses. And to add to the complexity for that, the frequency of these events has more than doubled. So carriers, carriers are backing out of counties. They're backing out of regions. They're backing out of entire states.
Right.
So, Texas was already expensive a couple of years ago. Texas, when I first started insurance, Texas was the third most expensive state for home insurance. Florida, number one, for obvious reasons. 3/4 of the state surrounded by water. Louisiana, a close number two, also for obvious reasons. And then Texas is number three. Down here in South Texas, we're coastal. Harris County might not seem coastal. It's a tier 2 county. But it is considered coastal. So down here we have hurricanes, flooding,
tornadoes.
Even down here we have tornadoes. West Texas got brush fires, wildfires, tornadoes, hailstorms, and Dallas, DFW area, tornadoes, hailstorms, flooding, as of like a couple weeks ago.
Right. So you got catastrophe after catastrophe.
It's catastrophic weather losses over the past few years have just been horrendous.
Yeah.
Let me ask you this question. Is the forward thinking and the future thinking, since real estate is a little bit cheaper here than like California or New York, are we going to just get overwhelmed with the everything else, like with the insurance? Just be prepared to pay.
Like, are we going to be mirroring California?
Yeah, it's like, all right, they have more expensive real estate. However, our insurance is going to be sky high in Texas, Louisiana, Florida.
I can't speak for Louisiana and Florida. I know Florida itself is a dumpster fire. Southern Louisiana is also a dumpster fire. But I've had similar conversations like this recently, and it appears that the ongoing trend for insurers in Texas or for consumers, like homeowners, to get insurance, the carriers that they're going to have to be with, a lot of them are going to have to be non-standard carriers, and it can be a little bit more expensive, but I think the rates can be a little bit more controlled, perhaps. But the coverage isn't going to be as good as it has in the past with a standard carrier like Progressive, Travelers, Safeco. That's the ongoing trend of consumers migrating to non-standard carriers. And I'm hopeful that that'll preemptively prevent Texas from looking like California.
Well, I was looking at. I was actually in a meeting with one of the lead researchers with Texas A&M in their real estate division, where they look at all the numbers, and the people moving out of state to Texas, Florida has already surpassed New York. So it's California, and now it's Florida, then it's New York.
Wait, say that again, CJ?
So Florida, they're number 2 for like people immigrating from out of state to Texas.
Okay.
So of course it's for the insurance reason, but they surpassed New York as the next in line after the people coming from California that are coming to Texas.
Really?
So yeah, so it's California, Florida, now New York.
And I couldn't tell you how many clients I've had that were specific, like moving from California to Texas. And one of the reasons that they, just kind of doing a little discovery with them, getting to know them a little bit, picking their brain, finding out why they're moving from California to Texas. And they tell me it's cheaper. And
Yep.
Well, that's what I mean. Is like, all right, our real estate is cheaper, but people that don't mind, like coastal families, they're going to be able to afford, especially when people working remote.
That's a good point. Yeah.
Yeah, they're going to be able to
And
afford.
it's not just that. It's only like about 9 states out of the 50 that don't have state income tax.
And Texas
of
is
the
one
coastal
of them.
states, Texas and Florida are the biggest ones. So now that people can't get affordable homeowners insurance in Florida, they still want to go somewhere where it's close to a coast, but they don't have.
And I guess
they still don't have the responsibility for state income tax.
Right.
Interesting. I hadn't thought about that. I didn't even know that statistic.
Right. Barry, you want to chime in on that before we go? I'm gonna go ahead and put my 2 cents in. But
yeah, speaking on what I just talked about, they just had something new in California. I think it's going to have a whole lot of people coming back. I mean, not coming back, but coming to Texas. I don't know if y'all saw, but California has on the thing that they're going to try to start taxing mileage.
I saw that.
Yeah,
you saw that, right?
I saw that.
Yes.
I thought
but they say with all the electric
thing?
cars they have, they're not getting the gas tax. So they're talking about starting to tax miles.
I saw that.
I thought I saw that. It was like someone's got to be trolling people doing that. But is that a real thing?
No, yeah, I went and Googled it, and they're looking to do some preliminary. It's not a law yet, but they're working on it.
Man.
But that's gonna be crazy,
bro. Yeah, that's crazy. As far as like the escrow, I try to educate my clients that the mortgage, the mortgage stays the same, but your taxes and insurance will go up.
Yeah,
and I try to do that. So to let them know, because a lot of times they say, okay, if it's fixed, I'm paying this amount for 30 years. It's like, no.
Hey, that PI stays the same, but that TI changes every year.
Right.
Yeah.
Well, that's.
Let me add to something that Barry just said. That you bring up a good point. When you're making those escrow payments, if your pocketbook allows you to, pay more than what the monthly statement is to go into that escrow account, because you would much rather have a surplus in that escrow and then get a bill for the next year. But you picking up what I'm putting down, you would much rather. And I learned that the hard way. For me, for me personally.
Let me ask you this, John. Don't some mortgage companies send you back if it is over?
That would be a B question, actually.
Yeah, they definitely do.
Do they?
So if you pay more, they're gonna end up sending it back to you.
Okay, then make yourself a savings account.
Oh, yeah, make yourself.
At the end of the day, it's still your money. So, John, what would you recommend as far as overage? How much should you pay over?
Well, I'm going to quote my father-in-law on this one. Add an extra 5% every year at a minimum.
Right.
And that could even be on the
this conservative side. This is what they do with my mortgage. They just adjust the difference. So you're going to pay the difference the minus the surplus from last year. They don't really give you a big bill, especially if it's not. They'll just add it to the difference so it makes up for the next year. So so that's how they do it. They'll you just look for increases. So my 2 cents I wanted to add in is that it's different mind states, and different mind frames for people that's looking for affordable housing, and then people that's used to what this housing thing is supposed to be, which is an investment. For those first-time novice buyers, you got to we was talking about this. CJ and I was talking about this last week. You can't have the tires wrong. Well, I don't want to say you can't have. It's not wise. It's not financially sound to be at the tippy top of your budget for your first house because of things like this. Insurance can increase. Taxes can increase, especially if you got a new build. Your taxes going to increase. So if you're already at the tippy top of your budget and you house poor, and then everything goes up, then from there you could wind up in trouble. You wind up in foreclosure. That's how it happens. It's like a lot of people want too much, and they think they're one and done, and this is it. And they don't want to do that intermediary stage where, hey, all right, this is not my perfect house, but it's enough to live in, and I'm using this as an investment for 5 to 10 years till I can get
building that equity.
Building that equity and getting something better. They just can't get. A lot of people can't get that through their mind. Like, hey, let me go on the conservative end. I'm thanking God now that I went on the conservative end because I started to go up. I could have afforded a lot more house, 10 years ago. Now it would have been a lot more payment, but probably when the times got low and the money got tighter, who knows what will happen. So luckily it was so affordable that it wasn't, much trouble. But now I'm reaping the benefits. Now I paid what I could have afforded back then, and I paid it down early. And that's the wise thing to do. Now it wasn't sexy, it wasn't all the stuff that I wanted, the high ceilings and all that, all the amenities, but it'll do. So but then if you look at how many people you're gonna have, very, very few people that I had at my house in these 10 years anyway.
Yeah.
So
and the average amount of time somebody stays in the house is about 7 years. So
7 years. So like, why are we stretching ourselves out for stuff? And that's not financially sound. Yeah, and especially and it's the trend that everything's hiking up as far as you got to look at next year. If your budget is $2,000 and you get a $2,000 house, what if it's 23 next year?
Yep.
Because salaries aren't increasing like
Right.
taxes and insurance rates are.
Right. So that's the issue. So that's what I wanted to bring kind of to the fore. Let's go to the. I got a few of them. Let's go to the next one real quick. I got a few of them in various topics of this. Let's go.
Before I was a homeowner, I'm glad I know it now. If you are not doing this every single year, you could be costing yourself a lot of money. If you finance your property, there's a good chance that you pay money toward an escrow account, which is where your property taxes go. Each year, usually on the anniversary when you bought your home, your homeowner's insurance policy renews. And typically you're not notified that this happened. So here's what you should be doing every single year. Right around the anniversary of when you purchased your home, you need to give your insurance agent a phone call. Do not call the company's call center. Call your agent directly. Here's all you need to say. What can you do to help lower my insurance premium? If you don't have a go-to agent, or if you're just looking for a new one and you live in one of these states right here, shoot me a DM, ask me for mine so they can help you out. On my last renewal, my agent was able to save me over $600, and maybe you can save a ton too.
Shameless plug at the end right there. Corey, I welcome you to the panel here. I'm gonna get you in here. In a second. I want to go ahead get John. I wanted to say my 2 cents, and I'll open the panel from there. They mentioned this in the last clip, but we didn't really go into it, so I'm glad this clip kind of reiterated. Is that a good thing? And I think, and I kind of slept on it. I thought it was more of a passive thing, like, hey, as long as they don't increase it, I don't care. But is a good tactic to be more aggressive? Like, hey, can I save every year?
Well, one thing that immediately stuck out from that clip is you're definitely notified that your policy is renewing. I'm pretty sure that's legally required. You're gonna get notifications that the policy is renewing either by email or mail. They're gonna send you an updated declarations page. And if they don't have, I'll tell you when you're really going to hear from them if they haven't gotten paid yet from your renewal. Because loans get sold off all the time, and insurance companies don't get notification of that.
Oh yeah, nervous.
So that's one. Yeah, so that's one thing that homeowners need to be wary of. Now, another thing that dude said was calling your agent directly. Yeah, that's definitely a good thing. And quote unquote, what can you do, or what can I do to, or what did he say? What can you do to help me save some money?
Yeah. What do you need? How can you save me some money on my insurance premium? I guess paraphrasing it.
Well, I'll answer that question with a question. How long ago was that video made?
I gotta look. I just clicked off of it and went to the next
Okay,
one.
because
I think pretty recently because it's on the Explore page.
because like similar to what we were talking about a little earlier, carriers are just shutting down. So the options that people had like 2 to 3 years ago is wildly different and more limited now than it was then. Now, the first thing that comes to mind when it comes to saving money is, I mean, when it comes to insurance, you kind of get what you pay for. So if you're down for having higher deductibles and cutting water coverages, then go for it. Then yeah, if you're more prone to take a little bit more risk, then yeah, go higher deductibles, because the higher the deductible, the lower the cost of the policy. If you plan on never submitting a claim and if you only wanted to use it in the event like the house burns down, then yeah, higher deductibles are going to be a better option for you. And with interior water coverages, if you've got like a $25,000 all peril deductible, what's the point of having $5,000 in water backup coverage? That's just paying for something that you know. Why pay $25,000 out of pocket to get insurance to pay $5,000? That's just pointless. So that's when it comes to the discussion of measuring the value and finding like a healthy medium of what each individual is comfortable with as far as cost goes, and then coverage / risk.
So basically, you're saying that he's exaggerating to get some.
Yeah. I think that. I mean, you heard at the end of the video, and he said, if you don't have an agent in these states, call me. I think there was definitely a plug for a little personal advertising there.
Oh yeah.
But I mean, yeah, there's different ways to explore saving money. Now there are some carriers just have default minimums with certain coverages, like personal property. Their default minimum may be 60% of the dwelling coverage, which may seem high to you looking at it on paper, but it's just there. It doesn't affect the rate. So that's.
So, let me ask you this: when will it be a good time? Do you wait till this bill gets outrageous? Would you think is a good idea to, just like the property taxes, try to get the best deal every year, or do you think you just renew it and don't worry about it?
I would say towards the end of the year, like right now, roof age is a really, really big deal. And like that's the most, I would say roof age is the most, if not the most scrutinized item. It's one of them as far as insurance carriers go right now. And
what's the proper age? What's the premium age that they're looking for?
Some carriers aren't wanting anything less than 5 years right now. Other carriers are up to 10, 12. The standard used to be 25 years for architectural 25 years for architectural shingles, 20 years for your 3-tab composite. But yeah, some carriers won't take past 5 years. Now, to get back to your question on when it would be a good time to shop your insurance, I have to say probably towards the end of the year, specifically because, like, if you're shopping, let's just say, your home, you got a new roof in January. Your policies, you got a new roof in January, and your policy renews later that year. You're going to be rated off of that less than a year old roof. But by the time January 1 comes around, it's technically a year older. And so the carrier does not care what month it was added or what month it was replaced. They want to know the year. So if you're trying to work it to your angle work that angle in your favor, I would say towards the end of the year, so you can utilize that time.
Right.
Does that make sense?
Right.
Yep.
Gotcha. I'll let Corey, since you've seen part of the clip, I'll let you go ahead and introduce yourself, and if you want to go ahead and chime in on that.
Yeah, Corey Smith, Commodore Mortgage, mortgage broker. It's interesting to me when you talk about insurance, because I think it's one of the biggest problems that we have at this point in Texas. Houston, maybe specifically. He's out there in Washington, D.C. They're probably a completely different market. Down here, we've gotten hit quite a bit over the past few years. And my assumption, when I talk to insurance agents, nobody really knows why insurance premiums are doubling. The assumption is that maybe it's a little bit due to the risk and the money that the insurance companies have lost. They're trying to recoup those investments. So long story short, my issue is that the insurance premiums are going high and nobody really knows exactly why. What you're doing is you're forcing a lot of payments to go a lot higher because you're doubling on the premium. I give an example. I have a guy out in Pearland that had an actual premium that was $3,600. He got a notice that his insurance premium on renewal was going up to $12,000 in Pearland.
Right.
So yes. So you know what I'm saying? If he actually did nothing about that, he's paying $12,000. Right now, he's happy with $8,000, but the wind and hail out there in Pearland is just absolutely.
I was about to ask you, is that Pearland, Brazoria, or Harris County?
Yeah, it's Brazoria, right?
Yeah.
So that wind and hail is just hitting him hard.
He probably doesn't. His hazard policy probably includes wind and hail. He should get a hazard policy and then a separate wind and hail policy through Texas Windstorm. I would dare say Brazoria County, like tier 1 counties, Brazoria, Galveston, Matagorda, Chambers. Those are easier to insure right now than Harris County and Fort Bend, which was the total opposite 5 years ago.
Right. So then, you know what I'm saying, it's definitely a conversation, but that being one example, you know what I'm saying, imagine what the adjustment of his payment is. Fortunately, you know what I'm saying, he makes enough money where he's able to embrace that. But when you're talking about people that's buying these houses and they're living paycheck to paycheck, that's going to be a big deal. Right. And then now you're looking at them possibly giving that back to the lender. So long story short, you know what I'm saying, I think it's something that needs to be talked about. Not quite sure what the answer is, but I do think, you know what I'm saying, just shopping year to year, thinking that your insurance premium is going to go down is not the case for the whole country.
Right.
Corey, I pulled out my calculator and I did the math on that. That's going from a $300 monthly payment to $1,000.
Come on,
that's crazy.
Come on.
Right. CJ Barry, y'all want to chime in on that before I go to the next clip? On it.
Yeah. So with me, when I'm talking with buyer clients that buy, especially new construction, I always say you definitely got to watch the letter you get from the appraisal district, and always get an updated quote on your homeowner's insurance every year. Because, like John said, they'll auto renew you, and you just think, oh, we're just gonna keep it going. They can be increasing that premium just like Corey's people. What was it, 3,600 to 12,000? If I remember correctly. Crazy.
Yes.
That's crazy. So if you're not watching, next thing you know, you paying another $500 a month on top of what you were paying and had not even realized it, because you got to stay on top of that appraisal market. It's not market value, it's appraisal value. From the county and your homeowner's insurance premium. So you got to watch that every year.
Right, and I like what John said. Be mindful of the dates. So let's say know when you renew, you got to kind of probably mark that on the calendar. Me personally, and this is news for me because I kind of just looked at it as a passive thing. Like, as long as it doesn't change my note, I wasn't worried about it. So I should have.
No, you have to, because they're going to make changes on your policy.
Exactly.
It's not going to be the same kind of policy that you originally bought, too.
Right, right. And
Yeah.
like my first 6 or 7 years, never paid attention.
Mm-hmm.
Never
And
paid
like,
attention.
and like, was it this year? Was the first year that
First year that
legislation kicked in for homestead
Yeah.
exemption?
Yeah,
increase?
mine went 3 times. Mine went from 1,200 to 3,600.
Now,
But you
before we
should
go
have
to
got
the
some savings on your on the homestead exemption.
Oh no, my homestead. I've been having the homestead, but I just finally paid attention to the insurance when mine tripled.
But that's what I'm saying.
Right.
If you're not paying attention to what's going on in the real estate world across Texas, they passed legislation to allow people to save more money on their homestead exemption. But you don't see it as much because everybody's premium is going up on homeowners insurance. So
So
if
it's
that
like
stayed the same,
they're just
you're right.
counteracting
It
each
just
other.
starts
Yeah.
canceling out.
Yeah.
But like, if homeowners insurance stayed somewhat the same as it was, you would stand to save a good deal of money just with that legislation on the homestead exemption. But people don't realize it.
Right.
Mm-hmm.
Corey, are you familiar with the term reinsurance?
Reinsurance. I am not.
All right. So you mentioned that no one's been able to tell you why rates
Yes.
have gone up. So reinsurance is a huge factor for that. So reinsurance is insurance for the insurance companies on catastrophic weather events. And those rates have gone up 50% or more. And at the end of the day,
Gotcha.
yeah, and at the end of the day, an insurance company is just that, a company.
Yeah.
So what are they trying to do? They're trying to stay afloat themselves. So how do they stay afloat? They take rate. And who suffers for it? The consumers, of course. I'm a consumer
Absolutely.
myself. I'm certainly not immune to it.
Right.
But that is a huge driving factor. And like your client in Brazoria County, they're probably trying to pull out of that market entirely.
Mhm.
And by raising that rate, they're basically saying, like, please go look somewhere else.
Go somewhere else.
Like we'll
Yes.
take your money, but
Right.
this is a nice little pushing / encouragement to go shop elsewhere.
Yeah,
For sure.
Right.
See, I thought it was all based on reproducibility.
Mm-mm.
Yeah.
I mean, there's so many factors to it, but reinsurance is a huge one, and not many people know what that is.
Yeah,
Gotcha.
Yeah.
I did.
Barry, you got anything before I got the next one? We got a few more. So.
Yeah. Well, no, just informing your clients or informing my clients to to look at that. Don't just take it as face value.
Right.
When that next year comes around, like you said, a month or so before it renews, start checking or go to your agent.
30 to 45 days before.
30 to 45. Okay.
Yeah.
45 days. Let me ask you a question, John. Might be putting you on the spot here.
Hit
For
me.
the people out there that's shopping insurance, right? It's kind of like going to the casino. What's my odds that something is going to happen? You know what I mean?
Yeah.
So you know what I'm saying? When it comes to something like that, what are the items that maybe the odds are tilted in your favor if you choose to go without this? If you leave this off or you choose to lower the coverage on this, this doesn't happen
That's a
at
good
all.
question. I had a similar conversation with a dude I wrote a policy for last month. So in Texas, there are 4 water coverages that are offered. It's depending on the form of the policy. There's a named peril policy, which is an HO1 or an HO2, excuse me, or an HO3. But there are 4 water coverages in Texas. First one is called sudden and accidental water damage. Remember snowpocalypse from a few years ago? People lost power, pipes froze, pipes exploded. That's sudden and accidental. The next one is water backup. That's when nasty sewage waste, brown water, icky stuff comes into the home from the outside, either through a sink, toilet, or bathtub. Then there's coverage for your foundation. In particular, like Harris County, Fort Bend, a lot of tier 1 counties, it's majority a slab foundation. So, slab foundation, it's a big block of concrete underneath the house supporting it, and there are pipes down there. And that's where that coverage would kick in. And then the last one is called seepage. So seepage is a slow leak happening for 14 days or more. Now, if it were me personally, I'm not you are putting me on the spot, but I kind of like it.
Yeah, I got you.
Out of those 4 water coverages, if I were to eliminate 2, I would get rid of water backup and foundation, because the limits in coverage are a lot less. With water backup, more often than not, it's going to range between $5,000, $10,000, $15,000, 20. Foundation usually caps out at $25,000, depending on who you're with. But sudden and accidental, that's like the snowpocalypse thing, or you come home from work and your hot water heater exploded.
Yes.
That's going to be covered more often than not. That's going to be covered up to the policy limit. So the full, like, say you've got a dwelling coverage of 300,000, then sudden and accidental is going to be covered up to 300,000. And seepage, again, depending on who you're with, it's either you have it or you don't. And if you have it, then it's going to be covered up to the policy limit. Now, out of those two water coverages, or excuse me, water damages, out of those 4, I would say, just in my experience, are the most common.
Okay.
Granted, it's the other 2, they still happen. Don't get me wrong. But out of those 4, if I'm going to eliminate 2, I'm getting rid of water backup and foundation.
Gotcha.
The largest. Go ahead, Barry.
No. Go ahead.
The largest claim I've ever seen outside of a total loss was a seepage claim. This client, it was a, excuse me, getting over this cold. Living with kids, it's like living in a petri dish.
Right.
That's fact.
So largest claim I've ever seen outside of a total loss was a seepage claim. Long story short, this lady came home from work one day, walked in her kitchen, saw all the floors in her kitchen were buckling, like warping up, popping up out of place like they'd flooded. She called the contractor, scheduled them out a few days later. CJ, I see you shaking your head. The next day, she came home from work again, and the same thing's happening to her living room floors, like buckling, warping, popping up, basically like they'd flooded. So by now, she was freaking out. She called that contractor and got him out later that day. After his review of everything, he pulled the dishwasher out of its spot in the kitchen, and he estimated that the water line to the dishwasher had been leaking for 4.5 months. Total payout on the claim was about $198,000.
Whoa! Are you serious?
I kid you not.
Because he had to replace just about the whole bottom floor.
Everything.
Wow.
Yeah.
Right.
So,
and that's including all the appliances and all that stuff.
With
seepage. Yeah.
Wow.
Gotcha.
You know
now
what?
That is a claim-worthy issue.
Right.
Now, say you've got a 2-story home and your air conditioner is on the 2nd floor and your water pan is leaking, and you got a little sheetrock damage. Call a contractor.
Yep.
Have them do it and pay
bother.
cash. Don't submit a claim for that.
Yeah.
So, John, quick question: does it affect someone's premium even if they call to inquire about submitting a claim and numbers are run?
Short answer, if that's a sticky one, because depending on who you're talking to, like if you're calling, I don't want to name any particular carriers specifically, but if you're calling a major insurance company, talking to a customer service rep asking about coverage, sometimes they'll straight up submit a claim to verify coverage for you.
That's crazy.
Which is why it's really important that you don't talk. Going back to whichever, it was like the first or second video, having an agent that you can call directly. Call them, talk to your agent about what the issue is, and ultimately it's up to the claims adjuster, because your claims adjuster is going to go out there and do the homework. But I mean, the client can give their agent basically a rundown of it, and assuming they know what they're talking about, they'll be able to point them in the right direction. Like if this is what's happening and this is what it sounds like it is, this is potentially how it should be covered. Granted, the agent needs to add that disclaimer. Ultimately, it is up to that claims adjuster.
Yeah.
But this is how it should go down. Now, going back to your question, $0 claim, yeah, it can affect you. It can, and the reason for that is like let's say you call your carrier 3 times a year asking about coverage, and you're talking to that trigger happy customer service rep. They're submitting 3 $0 payout claims. When you're shopping around for the next year at your renewal,
It looks
that
like claims.
that new carrier
Right.
that you're looking at, they're going to see you as a trigger happy client
Yeah.
Trigger
and
happy.
and a risk.
Let me ask you this. I was going to ask this later on when it popped up because I got a clip that kind of relates to it. Is that, I real recently had a claim denied. So in the contract, no, it's not gonna make your insurance go up. Would a denied claim make your insurance go up?
Not necessarily. No. Now
Sounds like yes.
it can. it certainly can. But to add to what you were saying when you told me about that claim, like with your roof stuff, if you're not doing this, you should get a roofer to come out to your house once a year and do a diagnostic on your roof. Have photo record of the periodic granular loss and basic degeneration of your roof. That way there's documented recordings and pictures that you can bring to a claims adjuster, because they may see damage that was several years old and then think it's related to the new storm, or vice versa.
Yep.
So the more paper or picture or more documentation that you have backing up that claim, the more it's going to work in your favor.
Gotcha. Let's go, because I got a couple more. This next clip, before I get to the next clip, if people that's out there, I know a lot of people are watching on the replay. If you're live, go ahead and submit your questions in the comment box and we'll read them live. So you got any questions for our special guest John Flowers or any of our panelists, go ahead and submit. We'll read it live. Go ahead and hit the like button so we can get our algorithm going, and go ahead and hit from there. Now, this next clip, I want to see, we got a section called "Is he capping or rapping?" And capping means,
made it a segment there?
Get my head.
Capping or rapping, man. So capping means we're gonna watch this clip, and capping means that he's lying or exaggerating. Rapping means all right, he got a point there. He's telling the truth. So capping or rapping.
Man, John know what you're talking about. You don't need no definition.
It's for the audience.
Thank you, Corey. I appreciate you standing up for me, because I know what he's talking about.
Right. Let's see if this guy's
Can't
capping.
let him do you like that, John.
Let's see, is he capping or rapping? Let's take a look at this. Because a lot of people think they're gurus, and a lot of people cap.
Youth entrepreneur, owner, fan of assist popular. Guess what? You want to make sure that when you're buying properties, you have homeowners insurance, right? So listen, on all my insurance policy, I add the water and sewer line protection. But I also get an external insurance company, which is American Water, to protect anything that happens with my property as far as sewer and as far as the water line. So guess what? As long as you have the insurance for 30 days, you can go ahead and request your first claim. 95% of the time, I'm in construction for the first 30 days. The property is nowhere near finished or complete. So guess what? If something is wrong with my water line, I can call American Water and do my insurance, and they're going to cover it 100% free. The only thing I got to do is call them. They'll be out within the next business day. So listen, guys, make sure you have property insurance for all your properties, especially during construction.
All right, so capping or rapping?
Well, if he's got a property under construction, he needs a builder's risk policy, not a homeowner's policy.
Right.
First
so that's
and foremost. That's so he. Now, I mean, the water coverage. He's talking about water backup.
Right.
If I think, which under construction, yeah, that's a bigger deal. Which, with the I've written several builder's risk policies for your clients.
Right.
Water backup is automatically included in $25,000 with the builder's risk products that I've got. Sewer line, I haven't seen, at least that I'm aware of. I haven't seen any sewer line claims. Now, one thing that you could get in an argument with the city is where their responsibility starts versus the homeowners. responsibility starts with that
Yeah.
sewer line,
That's a big gray area.
which yeah, very big gray area. But I mean, if you need your insurance, you want that coverage. You're gonna be upset if you don't have it.
My thing
Right.
is, it's like if you made it past the foundation and you got it approved by the city, of course that's questionable. But if you made it that far and you're building, I don't see how you can do much more to do something where your plumbing is at a detriment.
I have to agree with that.
All right, so what would y'all say? You know, this is a quick cabin. Or
Cap. I say cap.
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 Definitely cap. It's not an insurance company I know where you call and they're gonna come out the next day.
Right.
Not one.
No,
A lot of
you're probably
a lot of
right.
these- another fake guru. See, and that's the thing, and this is the reason why I don't do a lot of like how-tos and advice for the mortgage business, because it's so situational. So
It's always case by case. Yeah.
case by case. So I go, a lot of people, yeah, this is done. I got an exception. There's always anomalies, especially in our business. See, everybody's like a snowflake. So I don't do the, hey, all right, you want to do FHA loan? You got to do this. Nah, everybody's different. You know, so that's why I don't do those type of videos. Let's go to the next one because I got like 2 or 3 more. You know, and we get close to the hour mark in about 10 minutes here. Let's go
Rapid fire time, ain't it?
Right.
Well, I got quite a few of them. There's so many of them.
Yeah, look, fine, man. We got time.
All
Go
right,
ahead.
so let's go ahead with this one right here. Boom. This is a good one.
They're always advising us not to pay off our house because they tell us, you know, if anything happens and if somebody sues us, then they can take our home from us. And it's not going to deter me from paying off the house, but I'd like something really smart that I can say to prove her wrong or something if I can.
Well, you have homeowners insurance.
Yes, we do.
Who does she think is going to sue you and take your house? Who's she concerned about?
I don't know. My parents are very much, they think that people are very sue happy, and they are. They're not wrong, but
what's your net
very
worth?
sue happy and stuff. What's our net worth?
Yeah.
I'm
trying to figure out if you have a target on your back is what I'm asking.
No, definitely not. Definitely not. I think we make $92,000 after taxes, and our net worth is probably about $200,000. We're sort of at the beginning of everything.
I'm just confused, Stacey. Do they have something that happens to them or someone they know that someone like taking someone's house? I mean, getting sued in general is a thing, sure, but they could still take equity. I mean, if that logic, that means you wouldn't try to pay on anything and have no assets at all because afraid someone's going to take the asset.
That's no way to live.
Right. Yeah, I know. That's what I said. I'm like, okay, well, I'm not going to stay in debt forever just because of something that might happen, right? Because there's a lot of things that might happen.
At the end of the day, I love what Rachel said because it's true. If you go through life like that, then you're never going to have any assets because you're just worried that someone could take them away from you. And in this case, typically, Rachel, I think we do umbrella insurance once you get to like a $500,000 net worth. And then from there on, you could, I mean, if you don't have a policy, I think you're fine. Once you hit 500,000 in net worth, you can pull one out and you can tell your parents, hey, you can sleep at night now. I'm fully, protected in case someone wants to fall down my stairs. But I think honestly, at this point, you're just fine. Like you're 100% fine. There's no target on your back. And at the end of the day, if someone wants to sue you, they can sue you and you would go through that process. And if you were at fault, you were at fault. And if you weren't, you weren't. So it's like, this is a whole what if conversation that's really hard to just speak about because nothing's actually happened.
Yeah. My parents are always advising us.
So this is a big deal. Let me preface that.
She's capping.
Yeah. Let me preface this before that because the reason why I put this in here, I get a lot of times with a lot of elderly people, they don't want to pay off the house because I guess the train of thought is that once they don't have homeowners insurance, then somebody could take the house from them if they get sued. So they keep a small mortgage on there so they can keep homeowners insurance.
I think your home is a protected asset. Don't hold me to that 100%.
The home said is.
Yeah.
But what about if
100%
pay off the house? If you pay off the house, you can't still have mortgage insurance. I mean, you still can't have insurance.
You totally can.
No, that's what I'm saying. So
yeah, for sure.
If you pay it off, you can still keep the insurance.
Right. But see, this is common though. This is a common misconception, especially amongst older people, that if you pay off the house, because this is, if you wouldn't have to go in, because I deal with a lot of customers, you would think this is absolutely nuts, but this is a thing. People think that if I pay off this house, that I don't have coverage. If somebody sues me, I can lose my house.
No, that is not.
That's why they keep a mortgage on it.
Mm-mm.
You know, so I know it's a myth, but it is a thing. So I'm kind of glad.
To add to that, I can assure you, my net worth is not $500,000, and I have an umbrella because you don't have to be a millionaire to be sued like one.
Right. Exactly.
Right.
Yeah, so that's why I put that in there. I just wanted to get your reiteration, especially when I got retirees or whatever. Hey, that's a myth. So go ahead and hear from an insurance guy for himself.
No, if your house is paid off, you're just not required to have insurance.
Exactly. What happens? Tell them what happens if you get sued.
Tell them what happens when it gets expensive. It gets real expensive. Now, if you've got home insurance, then you're going to have liability on that policy. The options are $100,000 in liability or $300,000, or more often than not, it caps out at $500,000. What's really frustrating is when you see someone with $100,000 in liability coverage, because the premium difference between $100,000 in liability versus $500,000 is maybe $20 for the year.
Oh, that's crazy.
So why sacrifice? And don't hold me to it. $20. It's less than $50.
It's cheaper than most people think.
Oh yeah,
it's a lot cheaper than most
people will ask me. I write most of my policies at $500,000 in liability, and they'll ask me if I can lower that. And I mean, short answer is yeah, I can. But you're going to save maybe $20 a year. So why sacrifice $200,000 in liability coverage to save $20?
Doesn't make sense.
No, it doesn't make sense at all.
Gotcha. Let's go ahead to the next one here. I got two more. Boom. This is California, but
customers with State Farm insurance, you need to know about this. Brace yourself for significantly higher rates this year. Yeah, State Farm confirmed to me that on average, they will be raising their rates by 20%, although some customers could see their rates skyrocket this year. And I'm not just talking about homeowners insurance policies. I am also talking about auto insurance, business owners insurance, and some experts also believe rental insurance. Now, in a statement, State Farm said that this is driven by increased cost and risk in California. You might remember back in May of 2023, State Farm said that they would no longer be accepting any new applications for homeowners insurance in the state of California, and many other insurance companies followed suit. California customers with State Farm insurance, you need to know.
So what's the deal with State Farm pulling out of California?
They're just getting hammered.
They're pulling out of Florida too, right?
Yeah, I think so. Now, what I want to know is what her version of skyrocketing means. If 20% increase doesn't qualify as skyrocketing,
right? So you think
that 20% increase? That's hefty. I mean, Texas is experiencing a similar thing right now.
I think Texas is a lot higher than 20%, in my opinion. I'm not an insurance guru.
35 to 40% for Texas.
Yeah, Texas is crazy right now.
Mm-hmm. So, I mean, I can't really speak for California just because I'm not licensed to write there. But
have you heard anything about you're Florida though, right?
No, I'm just Texas, and well, actually Texas and Alaska, but
gotcha.
No, California State Farm is definitely pulling out. I've got a client who bought a secondary home down near NASA, and he was complaining to me about State Farm in California. His primary is in California, and he was talking about how rates were increasing, and the big issue out there is fires.
Mm-hmm.
Yep. fires and earthquakes.
Yeah, I forgot about earthquakes. Yeah.
Right.
Which on a fun note, you can buy, depending on your carrier that you have in Texas, you can get earthquake coverage. So if someone wants to be my first earthquake client, they totally can.
We just had an earthquake in Jersey a couple of months ago. So New York, New Jersey just had that quake.
Look, that goes back to those casino odds we was talking about. I'd rather just roll the dice. You know, I'm okay with that.
I haven't. I
earthquake
offer it to everyone, but I haven't had anyone bite on it yet.
Yeah,
Gotcha. Well, this one kind of tags along as well. This is what we were talking about earlier. So
out of the top 10 U.S. cities with the most expensive homeowners insurance, Florida has 6 of them. Yet another reason why South Florida is becoming more and more expensive for homeowners. Starting with number 1, Hialeah, with the average premium of $17,606, followed by Miami, premium of $16,717, and rounding up the top 3, Fort Lauderdale at $15,484. You can screenshot it if you'd like. Now, when you compare the increases in homeowners insurance national on average, Florida is leading the pack at almost $11,000 compared to the rest of the U.S. at $2,377. Besides hurricanes and tropical storms, one of the big reasons as to why homeowners insurance is so expensive here is that because we make up about 9% of the U.S. market in homeowners insurance, but we have 75% of the claims, especially with roofing. 6 months ago, before you were able to, as a homeowner, assign your benefits over to the contractor that is repairing your roof and collect the repair costs from your insurance company. But here's the kicker. They would also have the insurance company pay for the attorney fees. In an effort to bring insurance premiums down, Florida about 6 months ago passed legislation where you can no longer, as a homeowner, pass over your benefits to a contractor in order to collect the fees that is due from the insurance company for repairs. At the end of the day, it's a great step in the right direction to combat fraud, but there's still a lot more to do to drive down the cost of homeowners insurance premiums. So affordability is more likely for home buyers here in this market. In case you didn't know, out of the top 10 U.S.
I had a question about more of the beginning. Kenner and New Orleans.
I knew you were going to ask me that.
Why is Kenner and New Orleans in the top 10 in the nation?
Because it's coastal, man.
It's built around water.
It's
below sea level.
Isn't the entire city sinking?
But you know where Kenner is on the outskirts of New Orleans.
Still, New Orleans.
It still exists. You talk about the difference between spring and Houston. I mean, you know what I'm saying?
Right.
That's just semantics. Like Corey said, that's spring versus Cypress.
Right.
Mm-hmm.
Right. So that's it. So they have a lot of claims out there in New Orleans.
Oh yeah.
So it's basically flooding.
It's basically sinking.
So
don't get me wrong, I love New Orleans, but
nice. You wouldn't want to live there.
No,
that's like Atlanta.
Right. I got. Let's see. I got one more. I'm trying to see which one I got. I got this because I had a question about this one right here. I actually have 2 more, but I got a question about this one right here. Let me go ahead and let me run this from the beginning. Hold on, let's see.
When we need a new roof, when our washing machine breaks, when our dishwasher stops, when our oven isn't working, when our microwave on top of the oven that's built in goes out. The insurance doesn't cover any of that unless it was from some catastrophic event. So we're thinking a fire, water damage, theft, someone breaking in the home. But the average repair for that is not covered by homeowners insurance. The things that people think their homeowners insurance covers that it does not.
So just to get it all the way straight.
One word.
Wear and tear, like your roof, your roof, unless something happens to it, is not covered.
Wear and tear is an exclusion.
Right.
Yeah.
So
wear and tear, it like general maintenance, routine maintenance, general aging. Yeah, that's an exclusion.
Right. Let me squeeze one more in there. Let's see. See if I can get this this last one here.
The things that people think their homeowners are
6 million American homeowners no longer have homeowners insurance because homeowners insurance has gotten so expensive, and a lot of insurers are playing tough with us, and you're saying not worth it. Let me tell you, this is potentially dangerous to your wallet, even if you're one of the roughly 30% of people who own your home free and clear. Even if you don't want to insure the dwelling, which I really would like you to have, but even if you don't do that, at least buy premises liability coverage. Because if somebody gets hurt on your property, or even something happens in your life, they may come and sue you. And if you don't have some kind of liability insurance coverage, you could be wiped out. A year of savings gone just like that. 6 million American homeowners no longer have homeowners insurance.
So that adds to kind of what we were talking about, that previous clip, or what the lady was talking about. So the premise with the premises insurance, that you can get sued, so on and so forth. So that's what she was talking about. And then I'll let you go ahead and react to that.
How do you think Greg Abbott got put into a wheelchair?
How did he?
He was on a jog, and a neighbor's tree branch fell on him.
That's
and his a hefty portion of his money came from a liability lawsuit.
Right.
From homeowners insurance.
Right.
Oh,
So, yeah.
Didn't know that.
Right.
Yeah. You need liability. Liability is such a huge factor.
Right.
Here's the thing I would add to that, John, just asking, you know what I'm saying? Was he in River Oaks or was he in South Park running?
I have no idea where he was. I bet Google would tell us real quick. Where did Greg Abbott get
And I'm trying to
hurt?
be funny a little bit because I think it
Well, he
depends
definitely
a
was
little
in the
bit
South
on
Park jogging.
Yeah,
Yeah.
I definitely think it a little bit of that has to do with the neighborhood, in my opinion. You know
Possibly.
what I mean?
Sure.
But if you're in a
there's
regular neighborhood, and something
subrogation
happens-
though. Subrogation will happen. So, this is another true story. One of our clients had her sister at her house. They were hanging out in the backyard. Somehow, the visiting sister tripped over a tree stump and tore her ACL. Now, we all know healthcare ain't cheap. Surgery certainly isn't. So,
sure.
sister that got hurt, she had to have surgery, ACL repair, follow-up medical visits, physical therapy, all that stuff. Now, initially, the health insurance company found the health insurance company covered all the costs, but they also investigated the injury to see if they could hold anyone else responsible for it. Following the investigation, the health insurance company found the homeowner responsible and sued her for the cost of everything.
Wow.
That's where liability would kick in.
Wow.
So I get what you're saying, Corey, and the neighborhood probably has a big factor to it, but it's not necessarily the injured person doing the suing, but through subrogation, it could be a third party, such as a health insurance company.
Dang.
Like, have you ever hurt your knee and gone to the ER and then gotten a letter from the health insurance company doing additional discovery? Because I have, and that they wanted to make sure that it wasn't someone else potentially responsible for it. Now, it was just me being stupid, but I vividly remember getting that letter in the mail.
Yeah.
Wow.
Look, you learn something new every day because I didn't know that.
Well, that's the point of the podcast. We're trying to educate people and trying to, really take a deep dive on this home ownership thing, from hitting it from all kind of angles, hitting it very granular. So, man, I thank John for coming on the panel. I know it's been a long
This was
time
fun.
coming.
Yeah, this was fun. Thanks for having me.
Hey, whenever you want to come on, let us know.
Yeah,
So,
I definitely will be back.
yeah. So we just
good to
try
have
to
you, bro.
educate.
Thank you.
Appreciate you, John.
I'll send you the link here after we get off. I'll send you a link there where you can share it, whatever, to your social media, or
Cool.
share it, with your boss or whoever.
Yeah.
So, but definitely use John. I use him for pretty much all of my clients, for the last few years. So, go ahead, get at least get a quote, second opinion. If you
Quotes are free. Quotes
get
are
a
free.
quote from him and go from there. But man, it is final thoughts, and then we're gonna go ahead and wrap it up. I'll start first since I'm already talking. I think you just got to be educated. I think inflation, shrinkflation, skimpflation, all that inflation is here to stay. I think we got to start making moves, investments to offset the rising costs. Because I think even if the outcome of the election is different, I don't think it's going to turn back. I think the prices are here to stay. It might slow it down, but I think it's here to stay. I think the new economy where you got to have multiple streams of income is here to stay. I think again, what our grandfathers and fathers did, I think that's ancient history. You got to update the software. Things are expensive. Combo McDonald's is $11.99 now. For chicken nugget combo. So they pay. So insurance. I would. Why wouldn't insurance be next? And the rest of the stuff that really matter. So it's like everything is getting expensive. This is what it is. So can we complain about it, or we can educate and try to do better? Because complaining about it is not going to make it. Correct me if I'm wrong. Complaining about it is not going to make the prices go down.
Nope.
For sure.
So just be aware of it and prepare. Be aware and prepare. CJ, you want to go ahead?
Right.
We
Well,
just go right.
Sweet. In addition to that, about getting educated, if you don't have the time or capacity to do it, put people in your corner that does. So if working with realtors, loan officers, insurance agents, like find the ones that are really invested in what they do, so they can stay on top of current events and keep you aware of it.
Right. John, you want to go ahead and final thoughts on that?
Check your renewals 30 to 45 days beforehand, because the example that Corey gave, because they're going to send you documents, but not everybody opens their mail right on time. Right. I know I've been in that boat before. But when you get that bill, you're going to have a bit of sticker shock. So shop your insurance, and that goes for auto as well. The biggest discount available more often than not is bundling, and just keep your eyes open and be open to suggestion. And like CJ said, if you don't have the time to do it, find someone that you mesh well with, that you can learn to trust. That'll do it for you.
Gotcha. Barry, last thoughts.
Going back to education and also getting a team around you, whether it's a insurance agent, mortgage broker, real estate agent, or whatever that cares about you and your family and how you are going to survive, and not just trying to get with somebody because they supposedly have a cheaper rate or whatever.
Right. That's coming up. That's gonna be our next show, man. Talk about these discount agents, man. Discount agents is gonna be the next show.
Oh, don't get me started on those.
I want to pay you hourly. The people that the cheap agents and cheap consumers. Because the actual changes are coming up soon. The changes coming up in a couple of weeks here. So, Corey, last thoughts.
Last thoughts is insurance is one of those things that a lot of people overlook. They overstep. They don't necessarily choose to understand it. Education is one of those most important things, especially when it comes to insurance. Insurance can save you a whole bunch of money and help you make a whole bunch of money from different facets. So do not overlook insurance. Make sure that you get with a specialist or somebody that's knowledgeable about the situation, whatever it may be, life insurance, homeowners insurance, flood insurance, whatever the case may be. Get educated so that you can make the right decision for your family.
Gotcha. And with that being said, man, we're gonna see y'all next week, same time and same channels. So with that, one more time, shameless plug, man. LenderCon, July 22nd at the Houston Improv, free comedy show, free food. Get your tickets right now. I got 25 that's gonna be free on sale, like right now. Here goes the link. It's in the description. Get your tickets. With that, We'll see you next week.
Have a good night, guys.
Later.